Hey guys, in this video we're going to talk about the 6 stocks that are up the most since I started my Wealthsimple account about 2 years ago. If you like this type of content, please subscribe to the channel, like the video, and if you own any of these stocks or have any thoughts or opinions on any of these stocks, would love to hear in the comments below. But I'm just going to jump right into it. The first stock here is Rogers Communications. Rogers, I'm up about 12.5% on my position. It's kind of gone on a bit of a wild ride over the last year because of um, acquisition news of Rogers acquiring another telecommunication company in Canada called Shaw. So the market clearly wants the deal to get done. It traded up on the news that the deal was occurring and getting closer to getting approved, then traded down based off of some reluctancy on the deal getting approved, as well as a national outage that Rogers had. People weren't sure if they were going to switch from Rogers to other providers. And then lately, the performance of the earnings has been pretty good. They just won a really important court battle on that acquisition. So now, as long as the government doesn't veto it, it should go through. And that's why the stock's been trading up despite the overall market kind of trending down over the last year. But I'll take my 13%. The other thing on Rogers is it has been paying me a 3 to 4% dividend yield. So overall, I've been doing pretty well on this one in my Wealthsimple account. The next stock that I am up on in my Wealthsimple account, First Capital Real Estate. This is a REIT of first class or flagship retail real estate. It's up about 13% in my Wealthsimple portfolio, and I have also been getting a dividend from it as well. I think this dividend's actually understated because they recently increased the dividend, but I think I'm getting closer to 5%. So in addition to the monthly distributions, have also been up overall on the position. This is a company that has a net asset value, I believe it's in the mid 20s. So they've been doing a lot of work to unlock shareholder disposing of assets that aren't being monetized very well, taking that capital, buying back shares to increase funds from operations per unit, stuff like that to really enhance the value for shareholders. So it'll be really interesting to see how that develops over time because we obviously still have quite a way to go between the current unit price and the net asset value of a unit price. But I think just lots of that pressure and that sentiment from leadership to unlock shareholder value has really been in part what's been pushing this stock up, paired with just overall interest rates potentially leveling off, vacancy rates being pretty low, and for the most part, most of their properties being filled with good leases. The third stock that is up in my Wealthsimple portfolio is McDonald's. So McDonald's is trading at a very rich valuation. I do hold it in, I think two or three of my portfolios. In this portfolio specifically, we're up about 17%, but it's a pretty small position. In addition to the 17, I do get a couple percent dividend. But this is one that I feel like just with people seeking out more defensive companies, stable companies, the valuations on this one has gotten bid up a lot. I think they may do about $10 of earnings. So this is like 27 times earnings for, McDonald's. So not a company I'm really looking at buying more of at these values. But I have been doing pretty well on it, and it is a core holding for me, so I'm not going to sell. I'll just kind of let it digest its multiple and let it grow into it, and over time I think I'll still do well on this one. But happy to be up 17 and change percent in this particular portfolio. And going over to the fourth stock, now we're getting into the companies that are up almost 20% plus. Diversified Royalty Corporation. So I've talked about this one when I was revealing my portfolio, but they pretty much own top line royalties on revenue on certain brands that are mostly Canadian, but some in the US. Mr. Lube, which is a car. Obviously, they replace lube in vehicles, but also other things with vehicles, just like a car shop chain across Canada. as well as Sudden, which is a real estate brokerage. Every real estate agent pays them like $70 a month. That goes straight to the dividend. They also have royalties on Oxford Learning Centers, which is kind of like extra help and tutoring centers across Canada. And I think they just inked a big deal for a U.S. cleaning service, commercial cleaners, stuff like that. So they have another like half a dozen other smaller deals, but those are kind of the main ones that make up the majority of the value of the company. In addition of being up almost 20%, I have been getting about a 7.5% yield on cost since buying this company early last year, I believe. So my total return over the last year has really been like 25% plus. So really good performance out of this one. I wish it did trade a bit lower because I'd love to average into this one more. It's a pretty small position, but I really love the cash flow and the diversity of the businesses that they are in. Okay, moving to stock number 5 that I'm up big in my Wealthsimple portfolio. It is Restaurant Brands International. So I'm up over 20%. I'm also getting a 3 to 4% dividend. RBI, I just did a larger video on the company. So if you're interested in that, check out that on my channel. But they own Burger King, Popeyes, Tim Hortons, get a lot of royalty fees and franchise opening fees. They also acquired a brand called Firehouse Sub, which is expanding across North America for now. So they're a restaurant business, quick service restaurant, hence their ticker. And they were really bid down, trading at a much lower multiple. As all of the quick service restaurants have kind of had some multiple expansion, they've rode that wave a bit. But they also got about a 10% jump by hiring Patrick Doyle, I believe is his name, who was the former CEO of Domino's Pizza. Everyone who follows this space closely knows Domino's been a super strong performing stock over the last 10 to 20 years. He executed a global expansion like no one else ever has in this space. Really focused on the franchisee, making the unit economics attractive, and that really being an accelerator of store growth. And he just got signed on to be the chairman of Restaurant Brands International as his next assignment. So people are really excited for what he can do for the business because they're really trying to take these brands, Popeyes, Tim Hortons, and blow them up nationally or internationally rather, similar to how Burger King is today. So lots of upside to this business. Trades at about a $40 billion valuation. And they're just really looking to grow globally, and they're still, even though they've grown pretty nicely, are trading at about a 21 to 22 times earnings. So not cheap, but when we're looking at McDonald's and Yum Brands and some other players in this space that are 25 to 30, they still do have upside just on a multiple basis as long as they can consistently deliver to Wall Street here. And the top stock in terms of percent return in my Wealthsimple portfolio is Meta. So Meta's gone on an absolute wild ride the last 5 years, as you can see. Went all the way up to $380, down to under 100, now back up to 170. So I actually own Meta in a bunch of different portfolios. It's been my biggest loser over the last year overall. But in this particular portfolio where I decided at a certain point when I strip out Reality Labs and the core advertising business that's been growing double digits was trading at like under 10 times earnings if I take out cash, I decided it was time to increase my position a bit. So I started buying some shares in my Wealthsimple portfolio, 11 shares there, and I'm up 65% on those shares. So a cost basis of just over $100. So this is one. It's nice to see in my Wealthsimple account up 67%, but I am down like probably 40% over the last year or year and a half on my overall Meta position. So got into Meta really early, so not hurting overall, but definitely still hurts to see a 70% drop to the lows. So I think it was the right thing to do to buy more as the sentiment got just so negative, as if like their core operation, which is still Facebook and Instagram, was shutting down. And I just thought it was attractively priced, even though I was also very frustrated with the company and how they were allocating capital. I kind of bit the bullet, bought more. It worked out at least short term, and it is now the highest growing stock in terms of unrealized percent return in my Wealthsimple portfolio. So yeah, that's it. In terms of my Wealthsimple portfolio, you can kind of see here, I have a lot of these positions. Like I invest in pretty stable companies, stable positions. They tend to not go up or down a lot. They just pay me a dividend for cash flow. So like I have some royalty funds here and some ETFs growing a couple percent. Canadian Utilities up 6%, CNR up 8% there. I just did a video on some of the stocks I'm down on, so you can kind of see some of them there. But you kind of get a sense for lots of my portfolios kind of plus or minus 10%. This portfolio is not that old, so I don't have any like multi-baggers in here that I can share with a cost basis from years ago. But you kind of get a sense that these companies that are 20, 25% up over the last 1 to 2 years, or depending on when I acquired shares, that's why those are the ones that are sticking out the most, just because of the type of companies that I tend to buy for cash flow. Anyways, I wanted to thank you guys for sticking around, especially if you made it this far in the video. Really appreciate it. If you haven't yet, please hit that subscribe button. Really appreciate all the support. If you have any thoughts on any of these stocks, would love to hear from you in the comments, and I'll see you guys in the next one.